Hi guys, welcome to the video. So today I'm gonna explain what are the inventory journal entries, what are the logics behind it, and what all stages we need to pass the entries, etc. So introduction: inventories are basically handled in a manufacturing or a production industries. Okay, each transaction will be an entry. We will see what are the transactions happening for entries. At the time of purchase, of course you all know what are the entry will be happening in the time of purchase. Then at the time of issue, if the inventories which is purchased has been issued for production, for further purpose of production. Okay. Next one, direct wages incurred. So this is an entry which these kind of direct expenses are treated not separately in the profit and loss account. It's treated as a cost of goods sold. So another one, direct expenses charged to work in. The direct expenses incurred for the production of this particular product has been charged to that product itself, not been charged separately in the profit and loss account. Next entry, indirect expenses occurred. And then the next entry, indirect expenses charged to the work in progress. Okay. Then the final stage, after production has been done at the stage of finished goods, the material has been converted to finished goods. Then the final sales entry classified into two. The first one inventory entry and the second one sale realization entry. So I will explain each one. Then the ninth point is spare entry. The spares account, the spares charges, which is uh, not charged into the cost of goods sold account. Okay, the spares account is treated separately in the profit and loss account, but entries in the all other transactions are treated as cost of goods sold account. Okay, so starting with inventory purchase entry. So starting from journal entry, the inventory purchase entry is raw material account data, spares inventory account data to accounts payable. So as you all know that in raw material account and spares account, both accounts are inventory accounts, so both are current asset account. So when it is increases, we will debit the account, right? Okay. Going further, accounts payable. Accounts payable is a current liability. So when the account payable, the current liability entry increases, we credit, right? Yes, credit the receiver. Okay, I'll go for the material issue entry. So the journal entry will be work in progress account debtor to raw material. Here work in progress account is a current asset account. Raw material is also a current asset account. Scenario is raw material decreases. What we have purchased has been taken for the production. Raw material decreases and work in progress. The process between the raw material and finished goods is called the work in progress stage. The raw material has been taken for the further production. The raw material decreases, raw material will be credited. Work in progress increases, so we will debit work in progress as an asset account. Okay. Next one, direct wages expenses is occurred. So this is a direct wages is a direct expenses. I will see what is happening. Okay, what is the general rate? Direct wages account debtor to wages account. Direct wages is an expense account. So as per the nominal rules of accounting, debit all expenses and losses. And wages payable. Wages payable is a liability account. Liability increases means we will credit, right? Yes, being direct wages occurred asset. Now the direct wages is transferred to work in progress. This is the entry which we will take the direct wages expense account towards the work in progress account. So the direct wages account will be nil and the work in progress increases. So the journal entry will be work in progress account added to direct wages account. Here the direct wages increases. Direct wages, work in progress increases. Work in progress is an asset account. Okay, so it increases and direct wages will be decreases because the amount spent as direct wages is taken as the cost of the goods. Okay, the act wages will not be shown in the profit and loss account because it has been taken to the finished goods, right? That work in progress increases, right? Work in progress increases, the quality or the amount spent in work in progress increases, right? Yes, and that wages decreases. Other entry, other indirect expenses used for production. So this is generally for other indirect expenses used for production. So generally will be other overhead. Other overhead can be anything related to the production which should be charged to the finished product. So the entry will be other overhead account debtor to accounts payable. As you know, all know that the other overhead account is an expense account and accounts payable is a liability account. So when we need to increase the liability, we need to credit it, right? Yes, when we need to increase expenses, other overhead account, we need to debit, right? Debit all expenses and losses as the nature of nominal account. I'll go for the further entry, transfer to other overhead to work in progress. So this is an entry where we charge the other overheads to work in progress. Therefore, the entry will be work in progress account debtor to other overhead account. So work in progress will be increased for rupees 20,000 and other overhead expense will be decreased. So the other overhead expenses will be charged to the finished product. So the narration will be being other overhead transfer to work in progress. Next, the finished goods manufactured. So this is a scenario where the work in progress is changed to finished goods. At that point, the entry will be happening. So the general entry will be finished goods account debtor to work in progress. At the previous entries, we debited work in progress, right? Yes, and that work in progress is an asset account, right? At this point, finished goods has been increased and finished goods has been made, so finished goods should be increasing, right? Finished goods is also a current asset, right? We will credit the work in progress account because there is no more work in progress, right? The material has been changed to finished product. So the narration will be being finished goods manufactured. Now that's a sale entry at the time of sale. Actually, sale entry will be classified into two. One is for the goods or the finished goods account and another one is for realizing the sales account. Okay, so now I am going to explain how we will treat the finished goods. Okay, cost of goods sold account debtor to finished goods. At the time of sale, finished goods has been taken over, right? We need to reduce the finished goods. Okay, in the previous entry we find that we debited finished goods, right? Finished goods is a current asset, right? So current asset has been taken over. So we need to reduce finished goods by crediting finished goods for rupees 2 lakh. And cost of goods sold is an expense account where we keep all the expenses related to the production. For the when we add all the expenses related to the production of a particular unit. The next entry. This is the entry where we realize the sales. So the entry will be accounts receivable account debtor to sales. So account receivable is an account which is current asset account. We need to receive such amount. So we will debit account receivable account and to sales account 2,50,000. Here the difference of rupees 50,000. 50,000 is the profit. We charge the profit at the time of sales, right? Yes. So this is the sales is a nature of nominal head. As per the rules of nominal head, we can credit all incomes and gains, right? Yes. Now I'm going to explain what is spares and spares account. Okay. Spares account is an account which is shown in the profit and loss account separately to all the expenses related to the other transactions or other events is taken to the cost of goods sold account except spares account. Spares account has been treated separately. So the entry will be spares account debtor to spares inventory account. You can find in the first entry we debited spares inventory account, right, at the time of purchase. Now we have used such spares for the manufacturing of that particular product and the spares has been reduced. Debit the spares account. Spares account is nature of expense account. So we debited the spares account and we credited the spares inventory account. The spares inventory account is an inventory account and it has been decreased at the time of production or after the production. Okay, so the entry will be being spares treated as an indirect expense. And these are some of the clarifications I need to explain to you so that you will get a clear and complete clarification regarding these entries. And I have explained with all the ledgers, particulars and increases and decreases. Go through these points. Raw material, work in progress, finished goods, spares, inventories. All these are current assets. Okay. The nature of real account. Rule of real account is debit what comes in, credit what goes out. Current asset increases, we debit. Current asset decreases, we will credit that transaction or that account. Going further, direct income and direct expenses, spares, cost of goods sold. All are expense accounted. Right? Yes. In terms of expense account, increases we debit, decreases we credit. Next, direct wages payable, indirect expense payable account. These accounts are current liabilities. Increases we will credit, decreases we will debit. Next we will go for sales account. Sales account, as you all know that sales account is an income account. We need, when increases we credit and decreases we debit. Accounts receivable is a current asset account. Debit what comes in, credit what goes out. Therefore, increases we debit, decreases we credit. So guys, I hope you got complete and clear clarification regarding the inventory accounting entries. Please check on the link in the description. Thank you for watching this video.